with MoneyWeb.
South Africa's biggest property group, Growthpoint Properties, and the government pension fund have paid 9.7 billion rand for the V&A Waterfront, one of the country's major tourist attractions. Joining me is Growthpoint CEO Norbert Sasser. Norbert, thanks very much for your time. If we could just start with the price paid, the 9.7 billion rand, which is a significant premium to the 7 billion rand paid in 2007 when the property market was booming. How do you justify the price?
Evening, Bronwyn. Yeah, I think when you look at the price and compare it to what was paid in 2007, there are a number of factors that you need to bear in mind. Clearly, the asset as it stands there today, there are a couple of additional assets that weren't there in 2006, 2007. For example, the one and only hotel wasn't there at that time. The Link Mall, which is that mall where you have all the high-end fashion retailers, that wasn't there then either. And the breakwater parking garage with some of the retail down below where the Aston Martin garage is, that wasn't there either. So there are a number of assets there today that weren't there in 2006, 2007.
You've long wanted this asset. Were you in the bidding war in 2007?
Very much so, yes. 2006, we were very, very keen. We did our due diligence, and unfortunately, we just couldn't afford the asset, I think, at the time. Growthpoint clearly then was also a significantly smaller entity than what it is today.
What are your plans for the waterfront at this stage?
It's obviously quite an integrated asset with many facets to it. You've got retail offering, you've got an office offering, you've got a whole bunch of high-end hotels. There's an industrial component to it, and then clearly residential as well. So our view would be to continue to expand on the existing offering, to improve on the existing offering, to maybe right-size a number of the stores that are there. And then there's a lot of future development there with over 220,000 square meters of additional bulk that obviously we've paid for as well. And in order to maximize the value from our investment, we would seek to develop that bulk over the next, I would guess, 5 to 10 years. This is a long time frame. It's not something that can happen overnight. It's going to depend on the market.
No, but are you disclosing the rental yield on the 10 billion?
Bronwyn, it is a makeup of a number of calculations, if you want, and you have to break that asset down between the income-producing assets, the bulk, there are loans and financial assets on the balance sheet. And with regards to the income-producing asset, I think what we're prepared to say is that, it's a market-related yield. It's over 7%, and we think it's a very market-related transaction from that perspective.
Have you given any detail on how you financed the deal?
We have. I think Growthpoint has secured debt funding. As we sit here today, we've secured debt funding to fund our portion of the purchase consideration, which is about 4.9 billion. And I think, when appropriate, we would look at refinancing a portion of that initial funding through the issue of potentially some equity and the issue of some corporate bonds. And the bulk of the current funding that we have in place would be, long-term debt facilities from our bankers.
And the PIC, how closely are you going to work with the PIC going forward?
John, they are our largest shareholder, in 27% of our shares. They have representation on our board, and we work very, very closely with them. Certainly on this transaction, we did a lot of work together. It was a partnership that worked particularly well, and we hope that going forward, jointly, we could do whatever it takes to continue to enhance the overall offering at the V&A Waterfront.
Norbert, thanks very much for your time. Norbert Sasser is the CEO of Growthpoint Properties. David, do you have appetite for Growthpoint at this stage?
Growthpoint's always been at the low end of the yields. In other words, it's highly rated. And I think this deal might take for a year or two some of that yield away. Big company. It's got a lot of bulk. I think this is a very good deal. So for somebody looking for longer-term yields or growth, probably buy it, but not for the shorter term.
Big set of results out this week. We've got ABSA, the first of the banks to report. They've been very quiet.
They have. In other words, we've got no hint of what's coming out, and I think it's very important to see how banks have coped with what has been a very challenging year or couple of years here. How bad debts, how they're coping with bad debts. Are is there still credit demand there? Are they going to be able to expand? How do they see the business? Because banks we watch carefully. So I think this is going to be the first hint of how the banks have coped.
And the other benchmark will be for the resources sector.
Yeah,
Anglo-American out on Friday.
Anglo, of course. What's the dividend going to be? And also you might have heard, Martin, they're trying to distance themselves from South Africa. What their plans.
David, that's all we've got time for. David Shapiro, SAFM Securities. This SAFM Market Update with MoneyWeb is brought to you by the Discovery Invest Equity Fund. Discovery Invest, success is inevitable. That's it for tonight's show. Alec Hogg will be back in the hot seat tomorrow night. Full transcripts of the show are available on www.moneyweb.co.za. From the MoneyWeb team, thanks for listening and enjoy the rest of your evening. It's just gone 6:30. Time for Game Plan.